What is going on, guys? Today we're going to talk about a stock that I hardly ever talk about, and that is going to be Tesla stock. And we're going to go over some interesting things with the PE ratio, kind of look at Tesla compared to Amazon and its early days and what's kind of going on with the stock and how the PE ratio is probably affecting some of that. And then we're actually going to get into some very short-term news that's going on right now around Elon Musk that's clearly affecting the stock. And we'll end the video with some analysis of where we think the price target is going and where basically analysts think the price is going for Tesla stock. So if you enjoy the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. So real quick, let's take a look at Tesla's chart. So today they're down 6.42%, which is a huge move even for Tesla. Tesla moves a lot, but 6.42 is just a crazy move for a stock, especially of this size. So if we look at the last 5 days, they're down 13%. A lot of that in the back half of the week. We saw a lot of weakness in the back half of the week. At the start of the week, it was kind of iffy, feeling out where the market's going. In my opinion, it feels kind of like a turning point in the market, but that's for a whole different video. If we look at the last month, they're down 34%, over 34%. Last 6 months, down 42%. If we look at the last year, you can kind of see that where they've been, they kind of went up with everything, and then as a lot of the speculative stocks kind of got hit, they pulled back. So I remember at this time looking at some articles and looking at this run up and just thinking it was kind of crazy to begin with how much the stock went up in kind of such a short period of time. But you can see here that Tesla's hit a high of kind of around $1,200. So that'll be important when we look at the PE ratio here in a second, because it gives us an idea of where the price has been, where it's at now. So overall, interesting chart from Tesla. So here we are on Yahoo Finance, and there's only a couple things that I wanted to point out kind of on here, and the market cap is one of them. So they're down below 700 billion. At one point they were over $1 trillion, and pushing some of those top companies like Apple, Amazon, and other companies like that. And what's also interesting and wanted to highlight here is their PE ratio. So their PE ratio that they have right now labeled on here is 89.72, which is very, very low for Tesla. But we're going to take a look at and kind of compare it to something similar that has gone through a similar trend that we're kind of seeing, or at least in my opinion we're seeing in Tesla. And then earnings, $7.40, nothing kind of crazy there. They've been profitable for the last couple of years, which is good for a company overall. And then if we go into statistics, this is where it gets a little bit more interesting. So what you could see is you have a trailing PE ratio, which trailing PE ratio is less than half of where it's been previously, especially over the last few quarters. I mean, we were all the way up at 1,000 for back in March of last year, so a little over a year ago. But forward PE ratio is what personally I think is more important. So forward PE ratio, we're just under 60. And again, when you look at everything over the last kind of 4 quarters, you're seeing that all of the numbers are almost double that. So you have 107, which is a little less than double. Then you have 120, 104, 161, 163. So it's crazy how much Tesla has fallen. And obviously as the price falls, this PE ratio is going to fall. But their earnings haven't really, been affected a whole lot other than China shutting down, some concerns there. But nothing really crazy going on with the stock, just the overall weakness in the market pulling it down significantly low. So let's take a look at that PE ratio and kind of compare it to what, in my opinion, is a company that's gone through something similar to what we're seeing with Tesla right now. So here we have Tesla, and this is a website called Macro Trends. So you can see stock price, kind of the trend of the stock price. This is over all time, so all the way back to around 2011. And then you have net EPS, which, as we know, Tesla wasn't profitable at all until around 2020. They kind of started turning things around and becoming a profitable company, and that's when the stock price really started to spike up, when they became profitable. So the other thing that we have down here at the very bottom is their PE ratio. So their PE ratio, you can see it obviously was super low because they weren't making any earnings. So what we're going to do is we're going to shrink this down and just look at kind of the last couple years when they were actually had a PE ratio basically. And what we've seen is Tesla spike up and then fall and start to fall back down. And this kind of started, around 2020. So the market was still very high. And some of this has to do with them, increasing their earnings. So as they earn more, right, the PE ratio is going to fall. So they've been doing a good job of that. but also some of this has to do with, price action. So as the price falls, their PE ratio is going to rise as well. So overall, what we want to look at, and what I'm going to kind of zoom this back out, is I want to look at this compared to Amazon. So what we kind of saw from Amazon, right, is they didn't really have, I mean, they had a PE ratio early on, and then we kind of have seen it spike up and have these kind of run-ups. And then the one most recently that I think is probably most relatable to Tesla and kind of what it's going through now and what I think it'll go through over the next kind of couple years is figuring out kind of what is a valid PE ratio for Tesla. Because right now the market's still trying to figure that out. It hasn't fully figured out where Tesla should be priced to its earnings because it doesn't know its growth potential. Similar to Amazon, people didn't really know what Amazon was capable of. So if we go back to 2016 and kind of zoom in a little bit on this, let me move that just a little bit further out. You could see Amazon went through a similar thing. So Amazon went up to 720. And then again, similar to Tesla actually went up, above 1,000, which is very high. And then since then, in 2016, they kind of started establishing, okay, what is actually a fair value for Amazon? And this isn't to say Tesla needs to necessarily go down. Obviously, Amazon's continued to rise and go up over time, but it's really a question of where is the accurate and fair PE ratio for Tesla. If you read a book called basically The Intelligent Investor, which is a huge book by Benjamin Graham, Warren Buffett suggests it, there's a lot of conversation around basically PE ratio only being sustainable below a PE ratio of 60, which is very interesting because Amazon, as we kind of see, is that they've held up very, very strong. And the question is, at some point, are they going to fall back down to what, Benjamin Graham, Warren Buffett would consider more fair values of like a 25 PE ratio? And overall, they've kind of trended down, but you can see also, if we'll jump over here in a second to an Amazon chart, the stock price hasn't necessarily trended down. They've just increased their earnings, and the stock hasn't had as significant as of a run up, basically. So I could see something similar happening with Tesla. Again, I think it's going to be over the next couple years, and they can offset it by increasing their earnings. But I think they'll kind of fall into a similar range of where Amazon's been at for the last like 3 to 4 years, of around like an 80, and I think they'll probably sustain there for a while. And then, like I said, I think overall every company kind of finds a happy medium of around like 20 to 30 PE ratio. So that'll be interesting. The question will be, how does Amazon grow and change over that time as it gets to that point? Because Amazon hasn't even reached that point. That could be a decade away for Tesla, a decade plus away. But, that's just how a lot of people who look at the market see things going. I mean, you look at Google, you look at Apple, a lot of these bigger companies, they've fallen down into that 20 to 30 PE ratio for more recent history. So real quick, we're just going to take a look at that 2016 time period that we were talking about. So where the PE ratio kind of ran up and then fell all the way back down. So a lot of this fall, what we'll see here on the chart is, if we go into 2016, it's kind of hard to see in here, but this move, you're actually around $700, and by the time you get to the bottom of this dip, you're around $500. So there's a significant drop there in the stock price that Amazon saw. But if you held over time, you're clearly in a better spot than you were in 2015, even if you bought at $700. I mean, you would be tripling up your stock price just in that time period. And that's after a huge dip. I mean, if you go to some of these tops in here at 3,500, around there, I mean, you're even higher returns. So overall, again, it's not to say that Tesla's necessarily going to go down because the PE ratio needs more discovery. It's just saying that, there is a certain value that needs to be established for Tesla, and investors are still figuring it out. And that's on top of, the market weakness that we're seeing right now. So here we're going to jump into something that's kind of really short term. And this is what I think it helped drive the stock down over 6% on Friday. So there's some news that basically came out that Musk basically sexually assaulted some, flight attendant or something. So it's relatively, I never really pay any attention to these. I mean, they talk a little bit about it. They're saying that in 2018, Musk paid someone off basically to drop charges. And I never pay any attention to stuff like this, to be honest, because things like this always come up and then they just kind of blow over for the most part, whether that's right or wrong. That's not for me to say, but they always kind of disappear. But it's always a interesting time to basically purchase the stock because you never know how far a stock will run down. I actually recently purchased into recently before the stock gapped up, but Activision Blizzard, and they were going through something similar but a lot more widespread throughout the company culture. And overall, that was obviously a huge and great buying opportunity. I think I got in around 65, and then Microsoft announced that they were going to purchase Activision Blizzard at 95, and the stock ran up huge. So again, I'm not saying obviously this is a similar situation. I don't think anyone's going to be purchasing Tesla anytime soon, but it presents a unique buying opportunity on a very short term, very kind of short sighted event that, you know, is negatively affecting the stock. Last thing up here is taking a look at basically the analysts that are covering this stock. So we have 21 that are at a buy, 4 that are at overweight, 12 that are hold, 1 that's underweight, and then 4 that are saying sell. And Tesla, you can see, has always had kind of a very interesting spread. They always have people kind of all over the board. But what I like looking at is, you know, where are people actually targeting? The low, which is very interesting and kind of funny to look at, is at 250. So someone apparently thinks Tesla stock is going to go all the way down to 250, which more power to them, I guess. But the average is around $1,000. So if we pull out a calculator here, we can see that the price right now, so if we go $1,000 minus the price right now, which is around $665, let's just say you're at $335 difference. And if we divide that by 665, we can see that there's about a 50% upside to this stock, according to analysts, which these analysts are often looking at a 1-year period. So 50% return, you know, that's obviously a great return for the year. Personally, I do not own any Tesla stock. I still am trying to figure out how it's priced because I know there's a lot of growth there, and I know it seems to be, you know, a great company. I do like Elon Musk and like kind of for the most part where his head's at in terms of the business and the company. But I just haven't been able to pull the trigger on it. I think if it continues to dip, then I would gladly get in. But for right now, I'm still kind of sitting on the sidelines trying to figure things out. So whether that's a good thing or a bad thing, only time will tell. But obviously do your own analysis. Hopefully you enjoyed the video. And if you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you subscribe. And as always, have a wonderful rest of your day.